Welcome to Nasdaq Sector Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site, we have Masood Galsi. He's a Senior Analyst with Nasdaq IR Intelligence, and we're here for a checkup on the macro themes that investors have in focus. It's great to see you, as always, Masood. Thanks for joining us, and Q1 seems to be setting the tone for Q2.
Yes, so thanks for having me, Jill. It's interesting, back at Q4, we saw a bear market, stocks, bonds, everything was selling off. And then all of a sudden in Q1, we had a complete reversal of that. So two very different realities. And Q2 so far has been an extension of some of the themes that have been played out in Q1, so no major changes. And if I may use this graph in order to represent, I guess, some of the trends in Q1. So first of all, we're seeing earnings coming down. Analysts have been revising earnings down, and we're talking potentially a EPS recession. So Q2 looks like we'll also see a negative growth in earnings. So that's one. In terms of economic growth, has been coming down. This yellow is the City Surprise Index. So economic growth continues to be a concern. But despite that, we're seeing the S&P 500 here in green pretty much claw back most of the losses that it experienced in Q4. And that's mostly fueled by a pivot by central banks, including the Fed, have been incrementally dovish. And this blue right here is essentially the monetary expansion. So really, this rally has been fueled by one, expansion in monetary policy, and two, trade tensions easing. So perhaps down the road at some point we should see economic growth kicking back in, and that is the hope.
Yeah, because the S&P 500 is up 3 straight weeks in a row, and I think it's only been down one day in April so far. But even with earnings revisions moving lower, if for some reason earnings come in relatively good, you're going to start to see those revisions come back up. And that could be another catalyst, yeah?
Correct, absolutely. And against this backdrop, I think investors are rather nervous and cautious and a little jittery. And that's manifested by flow data. We have not seen, throughout Q1, we have not seen much activity with institutionals. They've been sidelined. Now, all of a sudden, they seem to be suffering from FOMO, and we're seeing flows coming back to the equity markets. So that's one. Also, defensives have been performing rather well. So utilities, consumer staples, and the real estate sector. So that's another reason why investors are somewhat cautious. They're parking their cash in defensive sectors. And finally, in terms of activity in Q1, we're starting to see volumes come down. So that adds to the whole theme of investors are a little cautious, a little jittery and nervous about the whole fact that we're seeing economic data come down and markets continue to rise.
Because it seems as if the narrative really has remained the same. Nothing has changed, let's say, from the beginning of April to where we are now, with the exception that we're coming into that full earnings cycle.
Correct, yes.
Right, and I don't know about you, but I'm kind of happy to shift focus to earnings instead of being so much on the macro narrative and trade talks and all that.
Yeah, so to your point, the expectation is that we should see some literature come out now showing that Q3, Q4 economic growth will kick back in. Remember, GDP average growth is approximately 3.3% historically in the United States. And two, obviously, as we see economic expansion, we should see some earnings growth, as mentioned earlier.
All right, Masood, thank you so much, as always, for joining me.
Thank you so much, Jill.
And thank you for joining me for Sector Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.